Hey everybody, welcome back to Ryan Makes Sense, where we talk personal finance, investing, and chart analysis. Today we are looking at big lots. That is big lots, if you did not catch that. So, I think I've done one or two videos on big lots in the past. This is a billion-dollar company trading at penny stock levels. So what we're gonna do as a little treat, because I am a big proponent of technical analysis, um, leading you to eventually what the stock price will be. This is not big lots. So let me pull up big lots. I I've had to have charted it in my lifetime, so I think it's gonna be showing. All right. At a first glance, we can tell this has had a very rough go. Okay. Okay, here we go. It's still loading. Apologies. Okay. Um, so if you don't know, if you're new to my channel, we look at the bigger time frame, and I'm talking monthly and yearly, and then we hone it down from there, and we get an idea of where the potential stock price could go. And that usually tells our story for us of where the stock price will go. And along the way, the company will usually get better or worse depending on how our analysis goes. With Big Lots, they're a billion-dollar company. I don't think they're going to shut their doors tomorrow. I think they're actually growing. So we could chalk this up to growing pains, but we will look at the tech. We'll look at the fundamentals. We'll look at their sales, revenue, income. We're going to look at what institutions and hedge funds are doing. Are they loading the boat? Are they dumping the dumpster? That makes sense. And this is my all-time favorite platform, so we're just gonna go ahead and get down and dirty here. Just make some quick observations as well. Okay. I do just want to check the yearly really quick. The only reason I want to check the yearly is because I want to see where we potentially are in a longer term turnaround. And good news. Maybe. Get out of here. All right. Uh, Good news, bad news, good news. The ship is turning around over the next few years. I'd say one, two, three, four, maybe. Over the next 4 years, it's not going to be an overnight thing. We could see the stock go from $1 to $8 essentially over the next few years. Honestly, it might go higher. I don't know how many shares float there are, and that's important because if there's a very low float, they can make the stock extremely volatile. So, it looks like a potential reversal could be coming in the next 2 to 4 years. And when I say reversal, I think it could ping pong between current prices to $8. That's just immediate analysis, but I do want to actually look a little closer. I apologize, my mouse is on its way out. So all right, we've got our Ichimoku clouds. We're trading below the bull cloud. It looks like we are in for, honestly, the near term, the next few months, probably some rough waters. Um, we're gonna go ahead and remove all studies. We're just gonna make it easier to do some quick cleanup slash analysis. So basically, this was trading in a range for 14 years, 2021, 15 years. You can see it traded in here, came out all the way back up and then back down. So, what would fit this narrative is we have a inverse head and shoulder. So we have our left shoulder here. Our head is completing and then our right shoulder. and a reversal back up. But I do want to check from 73.23. So basically our all-time high to our all-time low. And it's going to be, that's pretty much on point. And then 151. Okay. So, I don't think we are at a bottom yet, unfortunately. 151 was the nearest low, and that was this month, and we're at 161 now. So again, it's gonna take some more time. Does this stock to be deserve to be at 161? We're gonna go ahead and do my calculation. We'll check a few things out. Yep, I've got it trading in this down zone for a while. Let's see, how long do I have this box going? Okay. So again, we just saw the same MACD on Thinkorswim. Money flow actually looks like it's coming up. That could be institutions and hedge funds, which is kind of exciting. So they make 4.6 billion, but they lose 480 million. They are not profitable. The thing that does concern me is the declining revenues, and earnings per share is getting horrible at the moment. Quick ratio is a 0.16, meaning if they had to close their doors tomorrow, they would not be able to pay off all of their debts, notes, liabilities, etc. So that's kind of nerve-wracking there. Old data says institutions are actually selling, but money flow looks like it's kind of picking up. So Fintel, big. So we're going to let that load in the background. I just want to check. Let's check out their last earnings. More turnaround than it seems. Urgent sell alert. That's funny. Okay. Insiders are not buying, which is kind of concerning. I mean, the stock is at an all-time low, and insiders still are not buying. Do they think this is still too expensive? I mean, this stock is okay. So now we're going back to early 90s. Okay, the stock is trading at 90s level. And the reason it was not on Thinkorswim here is likely because I think they changed ticker symbols, and so it gets reset, unfortunately. So I want to see if I can look. I'm already at the max. Yeah. What's this? So, yeah. Stock is at 90s lows. I think they're doing a lot better than they were in the 90s. We're going to go ahead and take a look at one of these articles really quick in a moment. Let's go ahead and run my calculation while everything is loading and see what we come out to. Wow, they only have a $47 million market cap and they do 4 billion in sales. That is absolutely insane. Okay, so 4,610 million in sales. They're losing 480 million, 840,000, 40 million, 40,000. Now we're gonna look at the cash and the debt, and we're gonna look at the last quarter, and we're gonna go here. Okay. Cash 43 million. 43,980,000. Okay, debt, that's what I'm concerned about. Okay. Minus 2,139,200,000. Okay. Total assets is 3.1 billion. Total liabilities is 3 billion. Huge, huge concern. When liabilities overtake assets, that's when things get scary, and that's when the B word gets tossed around. I'm talking bankruptcy. So I don't know what they're doing. Liabilities increased, assets decreased. I hope we get some information on one of these articles. Oh, sorry. Let's go ahead back to our calculation. So our calculation is going to be way off. Wow. Yeah, that's very, very concerning. We're going to get a very high stock price here. So we're going to take this and divide it by 28,111,000. Typically, this works really well on micro cap, small cap companies. This is considered a small cap company, but their sales are what is going to make this just absolutely an astronomical stock price. Um, it's going to be like 72 bucks, which is insane. Um, the reason why this is not real and does not follow my traditional calculation is because of this. Liabilities are almost exceeding assets, which is very concerning. Which is why there's probably no market cap. Oh, nasty, nasty, nasty. Very far from profitability. I think it makes sense why insiders aren't buying. I don't, they have to watch out for themselves. And yeah, this might be experiencing some I mean it is currently experiencing some unfortunate actions. So reset the zoom. Okay. So let's just go back here. No, get out of here. Okay. So they missed on earnings per share. They had $1 billion of revenue. That's great. But if they do 1.01 billion, they'll end the year with 4.04 billion. And that's quite a bit less than 20 what we've got trailing 12 months. So the end of 2024 could be 4.04 billion, which would be kind of scary because they are continuing to lose sales. And that's the end of that article. Okay. More turnaround progress than it seems. Okay, Big Lots first quarter fell. We saw that. Net loss, yes. Debt went up. We saw that. Okay. So it's raising its target savings goal. Okay, inventory down, which is good. Um, yeah. While management blames the decline of softness among consumers, this does not stack up. Yeah. They're due credit for its gaining momentum. Are you kidding me? Um, taken several steps to improve the financial position. Last year, it eased back, at least back most of its stores. Okay, they opened buying offices in China and Vietnam. That's good, but how long until we see that actually take effect? How long do we see until that takes effect? I think this would be a phenomenal turnaround story, but we got to see what happens next quarter. And the what shocks me beyond belief is insiders are not buying based off what we see in the stock price. And again, my calculation is extremely off due to extreme sales. Um, so that's fine with me. Okay, we're going to look at institutional ownership. So old data says institutions and hedge funds own 76.97. New data shows 65.32. So institutions and hedge funds are actually selling. And we can see this trend here. Vanguard actually increased a smidge. Dimensional decreased by 69%. FMR increased less than 0.303%. BlackRock increased by 1.6%. Liechtenstein, this Germanish looking company, added 2.2 million shares. That's more than Vanguard. Almost the same as BlackRock. Looked like 91K sold out 1.7 million shares. So, and I'm guessing we have a lot of sales and decreasing positions down here, which we can see the minus, 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 minus. A lot of decreasing positions. Okay, Goldman Sachs added 2,700 shares. Congrats. Yeah, so a lot of micro buying by the micro selling by a lot of funds. So this would be a fantastic turnaround stock, but it has to definitely has to we have to see what happens next quarter. If their liabilities exceed assets, I mean, look at this short right here. People are shorting the heck out of this. And I see why. They're heading, I don't want to say bankruptcy, but they have more liabilities than assets, which is extremely concerning. So, for the sake of what we see in front of us, if one of your friends or family members or a stranger handed you a portfolio of things to invest in, showed you that they're not profitable, sales are declining year over year, earnings per share is declining over 100% a year for the past 3, 4 years, going on 4 years. And they almost have more liabilities than assets. I think you would stop them right there and say, "Hey, we're okay. Let me check back on you in like a few months." That's what we're gonna do here. There's no reason for me to even look at how many stores they're opening, how many they're closing. It doesn't matter until they can prove that they are growing that distance between the assets and liabilities, becoming closer to profitability. Maybe insiders buying, that would definitely show some confidence. But the fact that the insiders are protecting their paychecks and not buying into the stock, I think that's a little bit of a beige flag. That's what I heard this weekend. A beige flag. So, we're going to pass on Big Lots. However, this will be a good one to check into for next quarter, um, and likely the next year. Um, don't worry about trying to catch the bottom here because it's risky. It's very risky at this point. I don't care if you're putting $10 in it or 100 or even more. It's just risky. Um, yeah, it's yeah, yeah. Anyway, it's interesting too because a lot of the other retailers, Ross, Target, whatever, they're actually doing pretty well. Big Lots, not so much. So yeah, we'll just have to get an update from the company, see how their Chinese or China and Vietnam offices or distribution areas are doing. I hope they can stay over $1 because then they don't have to worry about NASDAQ compliance. But I am concerned just with where we're at now and where we've come from. So if you've made it this far, consider subscribing. I wish I had better news for the longs here, but yeah, if I was in this one and I was stuck, I think I would just wait it out. Um, if you do happen to make other trades and make gains on those trades, you could sell whatever stocks you're taking a loss on. I'm not going to say big loss, but maybe big loss. Offset those gains and kind of reposition yourself out or just hold out. Maybe you're a big believer in big lots and the CEO. But I say, show me, don't tell me. That's all I've got. Thanks for watching. Consider subscribing. Take care. I'll do an update video, probably after their next earnings in October. All right. Really goodbye now.